stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Two companies making headlines are featured here. Kevin Cook and Jeremy Mullen going to each give us their top pick for this week. Both your companies are making headlines for various reasons. Kevin, we'll start with you. Activision, the video game maker, is what you're looking at.
Yeah, Activision Blizzard got interested in this earlier this year after they bought King Digital, and that's the Candy Crush maker. Right. Now, none of us understand why billions of people are playing this silly game on their mobile sets, but it makes money, and they had 1 billion users. This was Activision's effort to get into the mobile space.
Right.
And so, they're famous for Call of Duty, World of Warcraft. They just launched something called Overwatch. We've slipped to a Zacks rank of 3 this week. It was a Zacks rank 1 last week, and that's just because the way the Zacks rank works, the estimates roll off after 60 days. But just this morning, we got an analyst bumping up estimates ahead of earnings next week, November 3rd. So Stifel Nicolaus came out this morning and said they think it's going to be a great quarter. This new Overwatch game just launched in May, and it already has like 20 million users. And they're taking these games not just mobile, but also digital. Some of the best analysts that I wanted to talk to this weekend were at my house, my sons, who play these games all the time. They were a little busy, so they didn't even have time. So I could say, hey, how does this game work? What's this all about? But, the company is doing a lot of exciting things. And, to compare them to Electronic Arts is trading at about 26 times forward, Activision about 23 times forward. And one of the greatest reasons I've liked this stock is it's been in this 6-week base here. We bought it a few weeks ago for my tactical trader service, but it's just been basing 43, 45 now for 6 weeks. New all-time highs this morning, above 45. I really like that. But these companies, the gross margins are fantastic. Both EA and Activision, 70 to 80% gross margins. And, they're still considered growth stocks because they're going to invent something new. I want to show you something real quick. A hedge fund did a big options trade last week. So if you can take a look at my screen here, this is called a short ratio call spread. Basically, they bought the November 45 call and sold 2 of the November 47 calls at the same time. So this is what's called a short ratio call spread, where you sell more options than you buy. And you can see the risk-reward profile of this trade, and this is what it would look like at expiration in late November. So this is obviously an earnings play for them. And you can see, they only paid 19 cents for 10,000 shares, 10,000 option contracts, which is equivalent to $190,000. And their profit, if this stock goes up to 47 after earnings, they could potentially make $1.8 million for a capital outlay of $190,000. But you can see from the risk profile there, they start to lose because they sold twice as many of the 47 calls. They'll start losing money. But my thesis here, when you look at a trade like this, a large trade like this, the hedge fund probably owns common shares of stock already. So they're happy to let some get called away. If this thing goes, if we have a nice earnings run here and it goes above 47, fantastic for them. They're going to make on the options trade and then let some of their shares go, at new all-time highs above 47. So I found this encouraging last week and showed it to our members, and I just wanted everybody to see it. So it's a very cool trade. Nice versatility of options.
All right, we'll let everybody know that we're talking about this on October the 24th. Because the time reference is in there, people following along on the calendar might find that useful. Jeremy, your stock soaring higher as well on better than expected earnings. Netflix.
Yeah, Netflix, an amazing quarter last week. The stock went from 100 to 127 right now in just under a week, which is pretty amazing, right? Reason being is they blew out the quarter again, 100% EPS beat. If you look at their price and EPS surprise chart, they don't really miss, right? They've beaten every quarter. The question is their outlook going forward and what's coming. Lately, international subscribers has been huge because people are concerned about the world, like the growth, how they're going to get growth. Because domestic, everybody has Netflix already. Yeah. So how are they going to grow? Well, it's international. There's people in Africa, in Asia, and Latin America who are watching Netflix, who are tuning in, who are subscribing, and that growth potential seems amazing. Just this past quarter, they added 3.2 million subs internationally versus 1.52 million over quarter, and that was against a forecast of 2 million. So there you see that substantial growth. Even domestically, though, they were adding, I mean, it's just slightly 0.37 million versus 0.16 million, but still, there's still some growth there. There's even actually still, can you believe this, DVD growth. People are still getting the DVDs, and that segment's growing. I don't know why that is, because like everybody's doing streaming nowadays. So the quarter was amazing. Investors loved it. The stock shot up 20% in the first day and continues to go higher. I look at the chart. I do have a fib set up. I always talk about above 150, so I'm looking for like a 150 to 155 target. You don't want to go chasing right here. What I'm looking for is you get that initial surge, short's got to cover, stock pulls back. You want to be a buyer around 120, 115 for a trade. That's not a bad risk reward. If you're looking 115 to 120 against 100 for the 150 reward. So, looking over kind of what the brokers were saying over the last week, price targets are being raised. UBS went from 92 to 119. JP Morgan went to 122 to 140, so close to that price target. Jefferies went from 76 to 80, so Jefferies really has got to get it together here. And RBC went from 130 to 150. They had some comments saying, that was just this morning, Netflix posted very strong Q3, beating expectations across the board, especially in terms of subs. So they're concentrating on that subscription level as well. They love the original content. A lot of people, like recently, Stranger Things is a hot show, and they just are putting a lot of money into this content. They're driving new interest, new viewers, and it keeps coming. And as for a Netflix subscriber for, geez, I don't know, 6, 7 years, we're not getting rid of it. And one of the keys, while they have a low value score and a high PE, one of the keys for Netflix is pricing power. They could raise the subscription $5, $10, and we'd probably still pay it.
Probably, yeah. And it's like those bears, to them, it's just a value issue. They just don't want to cross that line. And other people see it like, this is the platform. It's not Amazon, but it can trade it 300 times because the platform is growing internationally, as you said.
Yeah, and there is that competition. There's Amazon Prime, and there's other services that are going to come out and competing. But a lot of people are drifting away from that cable to these models where it's pay for service, pay for what you want, instead of having 500 channels and you only watch 3. So the whole TV viewing experience is changing, and Netflix is a beneficiary, and it's going to 150. So buy the pullbacks.
So you think that there's more room on the upside for the
There
stock
is more
price?
room, but just the way these post-earnings move works, usually it's that spike up and that pullback.
Yeah.
So like for Counter-Strike, I mean, it's perfect. I'm going to be buying any kind of pullback that comes down. Hopefully we get some news coming out. Like I saw something about Google starting their own service. So Netflix took like a point dip in like 30 seconds. That's the kind of thing that I might want to buy. And then the next day I saw, Google might be a buyer in Netflix. There is that buyout, rumors that come. I mean, it could be a buyout candidate as well. You see AT&T going after Time Warner. Somebody might go after Netflix as well. So that could be further upside there.
So you own it in...
I don't own it, but I'm looking
for
at
your service.
Yeah, I'm looking for the
118.19.
pullback. I'm looking for the pullback.
And Kevin, you own Activision?
I do.
In your service?
Yes.
All right. Now that we got that all squared away, thank you both. Don't forget, more stock information on our website, Zacks.com. If you haven't gotten there yet to look through it, there's a lot there to look through. There's stock picks, stock picking strategies, stock commentary, all interesting and worth your review. Just go to the homepage, Zacks.com, link to it all from there. With Kevin and Jeremy, I'm Terry Ruffalo.